Have you been wondering what a Roth IRA is, the different ways that you can use those, and if you're even eligible to use them? Well, you're not alone. It's a great question. That's what we're going to handle today in our segment for Ask Alex Anything. First up, Roth IRAs are some of the most powerful investment vehicles available to U.S. citizens. They provide incredible tax benefits to the tune of no taxable growth during the life of the Roth IRA investments. And then if you're over the age of 59 and a half, any distributions into those Roth IRAs or out of those Roth IRAs rather are tax free. So it's a double whammy. It's awesome. It's kind of one of those short-sighted things that the government decided to provide when they were trying to generate more tax revenue and encourage people to avoid deferring their income taxes in traditional IRAs and 401ks back in the day. But their loss can be your gain if you use a Roth. Now, there's a lot of tricky aspects to a Roth. Trying to determine eligibility is one of those. There are limits. If you are employed with income over 150,000 as a single filer or 236,000 as a joint filer, you are likely not allowed to make Roth contributions because you make too much money. That being said, there is a small window of opportunity between that 236,000 and 246,000 that allow you to make a reduced contribution, but it is a very, very narrow window in that place. Roths are amazing because you can put up to 7,000 a year if you're below age 50 or up to 8,000 a year if you're over age 50 into those vehicles if you have earned income of any kind. So that is certainly beneficial. Other ways that you can use it. Great opportunity to start your kids off investing if they have any earned income whatsoever. They can contribute up to that amount into a Roth. Also, if you're self-employed, have 1099 Schedule C and a business entity, you can employ your children, have them do some basic clerical work for you, do a PowerPoint if you're not savvy on a computer, and you can make Roth contributions with the wages that you would have paid them. So it's an awesome opportunity to get children saving early, understanding some of the benefits for saving for retirement before they're even out in the workforce or on their own. Beautiful, beautiful strategy to utilize when trying to set your children up for success. Another way that Roths are used or accessed, rather, if you're above those income phase outs, is what's called a Roth conversion via backdoor Roth. This is when you set up a non-deductible IRA. You make a contribution up to the contribution limit, which is $7,000 or $8,000 depending on your age, and immediately convert it to Roth. One major caveat with that strategy is managing and tracking cost basis. If you already have traditional IRAs floating out there somewhere in the ether, and you try to do this strategy, you will end up with a cost basis tracking problem, and your CPA is going to be very, very angry. So if you have IRAs or multiple IRAs, this is probably not a strategy for you unless you are extraordinarily savvy with an Excel spreadsheet. So keep that in mind when dealing with Roths. In the coming weeks, we're going to talk about other types of retirement accounts, but I wanted to start with my favorite and arguably the best, the Roth. Remember, hope is not an investment strategy. Have an awesome rest of your week. Hope you all are doing well.